From the weekly inventory numbers to the bigger picture on energy, Merrill Lynch Vice Chairman Tom Petrie also speaking at Enercom's Oil Services Conference in San Francisco today. He just returned from a trip to the Middle East. And of course, Tom, we do want to ask you about that trip, but I got to start off with the record prices that we are seeing in oil, especially as this morning we heard from oil short Boone Pickens. He said that he expects the weakest prices to happen in the second quarter. He expects a decline of between 10 and 15 bucks a barrel. What is your outlook, Tom?
Very similar. I think something in the mid-80s is very likely as we go into the spring. There could be a little bit more on the upside here because we still have geopolitical events, but the risk-reward is really reversed, where there's probably $2 of downside for every dollar of upside you could see at this point.
What are they doing with the petrodollars, Tom? They're not reinvesting them over here, are they?
No, they're generating a lot of dollars, and that was really part of my trip, Mark. They're generating over $1 billion per day, so there's a very large amount of wealth buildup going on, and a lot of it's being reinvested in the region. It's overwhelmingly impressive to see what they're doing to put the money back into their economy and to invest and diversify somewhat away from their traditional conventional energy production.
Are they going to be able to raise the standard of living of their people? But that's, although Egypt is not an oil producer, but still, that's what radicalizes people, the feeling they don't have a piece of the pie.
Absolutely, and I think there's a recognition. The old bumper sticker, give me one more boom, and I promise not to let it get messed up this time.
Yeah.
Slight modification of the way it read. They believe that over there, and I think they recognize that they've got a boom and that this one involves broadening out. When I was in Abu Dhabi, Saudi, Kuwait, and down in Qatar, I saw the dedication to that, where there is a broadening out and a reinvestment in the region, the likes of which we've never seen before.
Tom, I want to key in on a point that you made earlier, and that is diversifying away from traditional energy sources. Are you talking the Middle East investing in alternatives like wind and solar?
I am, interestingly enough. Now, understand, this is not going to make a big difference in the near term, but here's the part of the world with the longest future reserves of conventional oil. But they are looking at solar projects in their own economy. They're looking at wind. They're looking at various projects to take hydrogen out of gas and take the CO2 and put it back in the ground to recover more oil and use the hydrogen for fuel cells. Some very creative thinking about how they are approaching the energy equation. I'd say there's more believers in conventional peak oil in the Middle East than we find in Washington, D.C.
Is that investment, will those new technologies benefit that region in particular, or are those, is the intention eventually to market those technologies elsewhere?
Well, I don't know that it's gone that far yet. That's a good question, Melissa, but I think what they're thinking is, look, we've got a valuable resource the world needs. We're building up our own energy development here, our own real estate development, and as you heard from the prior speaker from Saudi Arabia, petrochemicals and aluminum. And these are energy-intensive projects, so they're realizing that even though they've got a lot of energy, they want to have more variety of energy generation than they've ever sought before.
Almost out of time, Tom. Very quickly, Boone Pickens said this morning that he is short oil, short-term, thinks it can go back to the mid to low 80s. What do you think?
I think he's right. Look, this economy can't take this $100 oil or something even a little north of there right now. Basically, when you look at the price of oil, it needs to come back into the 80s. Recognize that $85 a barrel, if that was the average this year, that's still a 15% increase over last year's average price. So there's a lot of cumulative drag in the system from what's already happened in oil pricing.
Tom Petrie, pleasure to have you with us today.